Welcome to another video from Q3of5 Solutions. You're currently watching the British International Distance College Accounting module, and we're going through assignment 2. We do offer private tutoring. You can find more information on our website, and consider following us on Instagram and Twitter, and keep watching the YouTube channel for more content and resources to help you. As always, our third-party disclaimer: the material that we have in this particular video is owned by a third party. We cannot guarantee the accuracy of the information contained in the third-party material. We're utilizing all of the questions simply as a tool for educational purposes. In the IGCSE Accounting Assignment Pack, one of the rules states that all resources may be used when answering assignments, including textbooks, the internet, tutors, etc. Q3of5 Solutions is a private institution and is no way connected to the British International Distance College. Any reference made to the subject material referred to official BIDC material, and we do not represent them as our own. We simply work through BIDC material with students as a means of additional academic support. Currently, we've covered the first two questions. We've looked at question 1 and 2 of assignment 2, and we are now going to be looking at question 3. So let's begin. Question 3 from your assignment book is on page 35 to 36. We're looking at Kieran is a sole trader who buys and sells on credit and keeps full accounting records. His transactions for the month of September 2014 include the following. So you've been given 1, 2, 3, 4, 5 separate transactions. The one is goods sold, goods returned, and then goods returned. And you've been given different customer names as well. A says, enter these transactions in Kieran's sales journal and sales returns journal and show the totals for the month. So nice easy questions to start with. We're looking at two journals. So whose business are we focusing on? We're looking at Kieran's business. Okay, so and we're looking at the different journals. So just to recap theory, a journal is a book whereby we disclose information that pertains to a similar type of transaction. So the sales journal for this is the month of September. So for the month of September, any sale for that month that's on credit will be recorded in the sales journal. And if there's any return, that will go to the sales returns journal. Sales returns journal. What do these journals look like? Well, there'll be a column for a document number. There will be the day or the date. There will be a details column. And because this is a sales journal, I sell with debtors, so there'll be trade receivables. Trade receivables is seen as an asset. I'll have sales. I could have cost of sales if I had the perpetual system, which I don't, because they don't mention anything here about a markup on costs, and they don't give you the cost prices either. So I'm going to ignore the rest. You could have a sundry account as well if you were buying other things or selling other things. Possibly, but we're not going to need that for this particular question, so I'm going to ignore that as well. Then for the sales returns journal, I'll have the same thing, except I'll have a column for the sales returns instead of sales, because I'm not selling. So those are the journals that we're going to have to create for this particular business. So let's start recording the transactions. On the 6th of September, goods sold, so that's the sales journal. Date, 6th of September. The details, who did we sell to? We sold to customer P. What was the amount? 400. Then on the 10th, more goods sold, and this was to customer T. And the cost was, or the price of the goods sold, it cost the customer 750. Then on the 14th, there were goods that were returned. So on the 14th, this were returns from P. And how much did P return? 100. Then we've got on the 20th more goods sold. And this was sold to Basics. That's what they've given you in the information in the question. And the amount here was 1,500. Then on the 26th, you have goods returned. And this came from T. And T returned 150. Then they said, show the totals for the month. So we've entered the transactions in the sales journal and sales returns. Those are the transactions. Brilliant. Then we just need to total up. So that's straightforward. Draw totals here. And let's sum up. Brilliant. And I'll do the same thing here. That plus this gives me a total. And I've now completed question A. So A was journals. 3A asked you to do some recording in the sales journal as well as the sales returns journal. Now let's look at question B. So question 3B says, make the necessary entries in the following accounts in Kieran's ledger. So we're looking at ledger accounts. And they've asked for how many ledger accounts. Okay, the sales ledger, we've got P's account, T's account, and Basics account, fine. And then 2 is the nominal general ledger, which is the sales and the sales returns. Okay, brilliant. What am I going to do? I'm going to have to draw up T accounts. So I actually want to show this on the side here. So you can actually see what those T accounts look like as we create them. So I'm going to draw up a T account. These aren't going to be very big, so a few lines should be enough. Okay, there aren't any opening balances here, so relatively easy to record. You're just applying your rules and understanding around the basics. Okay, how many accounts do we need to create? Okay, sales ledger for P's account. Okay, so we know we're selling goods on credit. We're buying and selling on credit. So if I'm selling on credit, goods sold, this would be a trade receivable. So trade receivable. And this was for who? P. I'll have a trade receivable for T, and I'll have a trade receivable for Basics. Those are the 3 accounts that they've asked you for. Then they also want the nominal general ledger. Okay, so this would obviously have come from the sales ledger, so brackets specific accounts. Okay, for each and every one of those receivables, okay, or debtors, and then you'll have a general ledger. And the general ledger is going to have 2 accounts. One for sales and one for sales returns. And that's B. Question 3B is asking you to draw up those T accounts. We now need to take the information that we've got in the question and we need to pull it through to the correct ledger account. So if I'm focusing on trade receivables for P, P bought once and they returned once. So in trade receivable P, in their ledger account, a sale will increase the receivable. So the sale would get pulled through to the debit side of that account. And this took place on the 6th of September. From the sales journal. Then we have a return. So there's the sale for P, and there's the return for P. So what does a return do to their account? It decreases the account because they won't owe you more, they'll owe you less because they've returned some of the goods. So on the 14th of September, sales returns from the sales returns journal, and we'll show 100 here. Then we need to balance this account because we do have amounts on both sides of the account. So how am I going to balance this account? I'm going to be looking at which side of the account is bigger. The account side that is bigger would then be the total that I'm going to want in the totals that I have over there. Right, so the balance will be 400 minus 100, which is 300. 300 would be the balance that I would carry down for the next month. So September, balance carried down. September, October, so 1 October, balance brought down, and the amount was 300. Then I need to look at trade receivable for T. So I've got T here, and I've got T there. So again, the same references are going to be made in T. So if I'm looking at the sale, I'm buying. So how much did they buy? They bought $750, and they returned $150. So the sale here would be referencing that. A sale will increase the receivable for that particular debtor. So that debtor's account will be going up, and that debtor account will go down when they return. So the date to change here, though, this is the 10th. And this was the 26th. The return was 150. So again, there's the sale, increases the receivable. There's the return, decreases the receivable. Then I need to do my balancing. So here, 750 is the bigger side, total up. Then I'll have 600, which will be the carry down balance to the next month. And that's the trade receivables account for T. Then my last account is for basics. There's basics accounts. Basics account, basic only purchase from us. So they're only going to have one amount here, 1,500, for an amount that they've bought from us on the 20th of September. So on the 20th of September, we've sold goods, so they've bought from us. So on their account, they're owing us, they're a debtor. So there'll be a debit here from the sales journal of 1,500. Then they wanted general ledger accounts. Remember, the general ledger is going to summarize. So these totals summarize what has happened for each of those accounts. We're obviously not going to be looking at the trade receivables because we've looked at it there already. So all we need to do is to show the sales and the total sales. So I have a total amount there and a total amount here for the returns as well as the sales. So in sales, I'm going to record on the 30th of September total sales from the trade receivables brackets total, okay, sales journal, and the sales journal total was that figure over there. Then I've got a sale return. A sale return will be viewed as almost like an expense because it's the opposite of a sale. Sale is income, so it'll have a credit balance, and then for the sale return I will have a debit balance, and this would have been trade receivables total. This will be the sales returns journal, SRJ, and the amount of the return would be 250. And that would be the transaction that you would have to record, or let's say the sum of all the transactions, because the journals group all the single transactions into a journal which totals them all up. So you have multiple transactions being represented by one total, and those totals are what we actually record in the general ledger. So here the general ledger is going to show the trade receivables of 2650 as well as sales returns of 250. And this should balance. So obviously if I take my sales ledger, there's my one amount, and if I add that amount and I add that amount, I get that total, which is 2,400, which should be the same as my total sales minus my returns, which are also 2,400. So you know you've done it correctly. And that was question 3B. We still have another question to look at for this particular assignment. We have question 3C, and question 3C says, on 3 October 2014, Kieran sent a check, not a check, sorry, apologize. On 3 October 2014, Kieran sent an invoice for 800 to Rachel Smith for goods sold to her on credit. Rachel paid for these goods by check on 12 October, deducting a 2.5% cash discount. They say enter these transactions in Rachel's account in Kieran's sales ledger. So I'm going to have to draw up something that looks similar to this. Sales ledger, for, who is this? Rachel Smith. They say, on 3 October, Kieran sent an invoice for 800 to Rachel Smith for goods sold to her. Okay, so if I'm looking at Kieran's business, Kieran is selling to Rachel, that will be seen as a receivable. So on the 3rd of October, an invoice was sent. So that's going to increase this account. So 3 October, we're going to record this as a sale from the sales journal. And how much did they sell to Rachel? 800. Sold to on credit. Rachel paid for these goods by check on the 12th of October. So that's going to reduce her account. So on the 12th of October, Rachel paid, so bank would have gone up, cash receipts journal, and on the 12th of October, discount allowed, cash receipts journal. So you received an amount after deducting a 2.5% cash discount. So the receipt is going to be 800 minus 800 times 0. This was 2.5%, so 2.5. Okay, that gives me how much? 780. Then 800 times 2.5 divided by 100, which is 2.5%. 2.5% is 20, and those two sides tally up because Rachel has paid off her account. They said Kieran sent an invoice to Rachel for goods sold to her on credit. Rachel paid for these goods by check on 12th of October. Enter these transactions in Rachel's account in Kieran's sales ledger. So this is Kieran's sales ledger. Kieran will be showing a debit of 800 as well as two credits, one for bank and one for the discount, that will ultimately reduce her account to 0. And that concludes question number 3.